Hello, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. This is a technical look at the euro versus US dollar as we end our week here on January 13th and begin our new trading week on January 16th. I'm going to start this look by first looking at the daily chart of the euro versus US dollar and take a look at the price action that we saw on trading this week. A week ago today, Friday, we closed the euro versus US dollar at the 105.26. We are currently trading around the 106.40 level, so we're up about 120 from last week's or closing level. So we're up on the week. That's more bullish. What is more bullish technically, or what I see from this chart from the price action this week, was I liked our low that we made here on Wednesday's trade. If you recall, the dollar was moving higher, the euro moving lower on Wednesday into the New York session. Why? Because Donald Trump was going to give his press conference on that day, and the market was anticipating that he would be more bullish in form of a fiscal policy agenda, talking about tax cuts, that agenda, talking about things like repatriation of funds, the things that have propelled the less regulation. Those are things that have propelled the dollar higher, and the market was in anticipation that he would be more of the same. What ended up happening was he wasn't that. He didn't discuss regulation, getting rid of regulation that much. He didn't discuss tax policy. He didn't discuss fiscal policy, increased spending, those things that sent the dollar higher. And so what we saw the dollar move lower. But before that happened, the market was moving lower, and we were coming into a key support level against the 104.62. Now, if you look at the price action here in December and in early January, it doesn't look like that level is important at all. But what the importance of it comes from is if I go back in time, and I look at this low going back to March of 2015, this low came in at 104.62, and that at the time was the 13-year low for the euro versus US dollar. Fast forward to where we are right now into December and January, and yes, the market somewhat didn't pay attention to it, although if you were to look at an hourly chart, you would see price action above and below that level. But it still is an important level for me. And on Wednesday, when the market was going down toward that level, at a pretty good clip before Trump's press conference, we stalled at that area. You can see that on the hourly chart, how the price came down to that 104.62 level right through here, and it was moving pretty quickly, and the market kind of just stalled at that level. You can also see it on the 5-minute chart. If I were to go back in time to Wednesday's trade, that's the 11th, put a horizontal line here at the 104.62 level. That would be right there. We just spent, you can see the market moving up and down around that 62 level, waiting for Trump to come in, and then we started to see the market move higher away from that 104.62 level. So back to our daily chart. I like the fact from a bullish standpoint that we held that level. That was a tough test, a good test, and the market moved higher. Now, the next 2 or 3 days, we close higher on Wednesday, close higher on Thursday, and are closing higher and trading here today. So that too gives us a better feeling for that currency pair. Now, where did we go? And well, we went to a high price here of a 106.84 that occurred on Thursday. Today's trading range, we stayed within Thursday's trading rate, so it's an inside day. So it's not exactly showing a ton of momentum to the upside, is it? And in fact, the high price that we saw on Thursday stalled ahead of the 38.2% retracement of this move down from our high in November to our low that we saw here in the month of January. And so we can't even get to the 38.2, or we're not even near the 38.2% retracement yet of that move to the downside. So although we have some bullish signs here on the daily chart, we're not exactly running away yet. Nevertheless, if in next week's trading we're able to get above this 38.2% retracement, we're going to be looking up toward the 107.77 level to the 108.21 level as our next target on the top side off this daily chart. Those levels correspond with old lows and swing highs going back to this day in April, May of 2015. Swing low here, swing low here, swing high here, swing lows, all in this yellow area right here. It wasn't until November when we moved below that level that we were able to trade more to the downside here from this point right here. And in the month of December, we had one stinking day where the market moved above that resistance area, and the rest of the time we've been below it since, let's say, mid-November time period. So that's going to be a key resistance level on the top side, as is the 100-day moving average. That's the blue line in this chart at 108.76. If the bulls can remain in control, what would keep them in control? Well, on this daily chart, we can say, well, stay above the 104.62 level. That would be more bullish. That would be above that 2015 low price. There's got to be something better than that. And for that, I'm going to go to the hourly chart. I'm going to dig down into the hourly chart and take a look at what this chart is telling me. And when I look at it from a technical perspective, I notice action around the blue line here. This blue line right here, the smooth line, represents the 100-hour moving average. And although the price has traded above and below that moving average line, just focus on that blue line over the last 5, 6, 7 trading days, the market has reacted to that line. When I say reaction, I mean right here, we find buyers after testing the green line, which is our 200-hour moving average, and the market moves away from it. On the test right here, the market finds buyers and moves away from it. On the test right here, market finds buyers and moves away. On the test right here, we kind of sideways our way through and then use it as a level of resistance right here and move away from it. When we move back above it here on Trump's Day on Wednesday, what do? We move above it, we come back down and test it, and we move higher off of that to the high price of the week. And in trading today, in our up and down trading environment that we saw here today, we got close to that 100-hour moving average. And again, the market found those buyers moving to the upside. So we're seeing those buyers buy against the 100-hour moving average. So instead of the 104.62 level being a level on the downside, we can say that stay above the 100-hour moving average. If we're able to stay above that 100-hour moving average, that'll keep the bias more bullish. That gives us that opportunity to move up and test those other levels on the top side off of our daily chart. If the market goes below the 100-hour moving average, the waters get a little bit muddy. It may not be that we go test the 104.62 level. We're going to have other levels in the way, like the 200-hour moving average. That's a green line here. Like the 100-bar moving average on the 4-hour chart. That's the blue line here. And in addition to that, Fibonacci retracements like the 50% retracement, 61.8% retracement. So there's going to be steps along the way to the downside, but get below this blue line right here, and that starts the process, the potential process for further moves to the downside for that currency pair. I've outlined the bullish case for the euro versus US dollar. I've outlined the bearish case for the euro versus US dollar and where your risks are as a trader. Stay above the blue line, more bullish, move below it, more bearish. And on the daily chart, move above our 38.2% retracement at the 107.06 level, and that's going to give us more bullish potential here for the euro versus US dollar in our new trading week. If you like this video, be sure you give it a thumbs up on YouTube. If you don't like it, you're free to give it a thumbs down, so please do that. My name is Greg Michalowski. Wishing you good fortune in your trading, and have a great weekend. Bye-bye now.